The cloud. Very good, very good. All right, so now I'm going to move up this chat box. Any questions you guys have? And yes, this is live trading. If you are new to my team, live trading is something I used to do before my schedule got busy quite a bit. So live trading, when I do live trading, I am running through my watch list looking for swings. Usually, today is an exception because I already know what I want to swing. I'm not looking for any more setups, but it will still run through my watch list a little bit. I'm also going to go over the Snapchat trade or the snap swing that we did over the weekend. That was really, really strong open for snap. A beautiful opening drive that put every option in the money for us. I'm going to go over that live as well. And then, of course, risk management, trading psychology, Q&A kind of style as well. This will be done at market close because I know people are trading during their workday. I know people have stuff to do after the market closes. So I don't want to take up any more of anybody's time once the market closes, because I know after the trading day is kind of done, we move on outside of the trading realm a little bit every day. And real quick, I just happened to click on Intel by accident instead of Snapchat when I started this meeting. This is an interesting setup to watch. I literally just happened to catch this by chance. Intel is not normally a name that I trade, but I do look at it every so often. I'm going to break this out to the daily time frame here real quick. And we got somebody waiting. There, okay, so this purple box, if you ever see a purple box on my screen when I use TradingView, it is because there is a gap that was there at some point on this chart. So in this case, we can actually raise this gap up a little bit because it has been filled somewhat. It's about 50% of it has been filled. So let's go ahead and get back to the 4 hour. This is kind of interesting because price is now trading in a channel a little bit. It's a really, really tight channel. And I will condense my chart a little bit. You know, it's not really a bull flag. It's more or less just a channel. I can see if you would think this is a bull flag, why you would think it. So let me go ahead and break that out. So yeah, this is a really, really tight channel. And what Intel is possibly showing is a reversal pattern here on the 4 hour time frame. And this would be, it's not clean per se, but I'm almost like thinking like this is a tweezer double bottom or a tweezer bottom, whatever. It might be called tweezer bottom or a tweezer double bottom, whatever it is. This is a reversal pattern, okay? Literally, it is just a double bottom, but the way that the 4 hour candles are forming, it looks like it is a tweezer double bottom or a tweezer bottom, whichever one it is. If you want to go ahead and Google it, you will see what I mean. This is kind of interesting because that is a reversal pattern, right? So double bottoms, price reverses back to the upside after making a double bottom because buyers held the same support level. And in this case, it looks like buyers held right above $50. Price is trading in a channel, stochastic Rsi and buyers territory. I'm not going to enter any position for Intel, but it is interesting. If you have a small account, definitely don't write this setup off. See if the option chain is showing a lot of volume to the upside. And Intel, by the way, is, excuse me, almost had a cough. It is a semiconductor. So this is, I'm assuming, Intel catching up with all that semiconductor hype. You know, if NVIDIA, excuse me, I believe NVIDIA had a big upgrade this morning. I don't remember what the exact number was, but I believe NVIDIA did have a big upgrade this morning. They report earnings later this week. So if AMD, NVIDIA, the semiconductor giants, start getting red hot again, watch for Intel to break out of this channel. Okay. Real quick, BA gap on 4 hour. Yeah, you're probably right. I mean, it gapped up this morning. Yeah, this big, beautiful gap also has a gap right here. That gap will be filled. There we go. My chart caught up. This gap will be filled at some point. Don't trade against this trend. Boeing is breaking out. It's going to break out with volume. My only thing is I don't like to chase. You know, Boeing has made what? How much are we up today? $12. Boeing has made a $12 move. I'm not chasing it, but close above 232 today. We will see 239.58 print next. Okay, massive volume bar breaking out of this big descending wedge. It's been in for almost the entire year, basically. So something to keep an eye on. If you're already in swings, yeah, I can see continuation up to 240. If you're not in swings, I would really watch for Boeing to sell off. What time is it? 308. Watch for Boeing to sell off between now and literally into market close if you want to get in. But these options right now, Boeing has made a $12.50 move so far. Those options are juiced with a little bit extra IV. I have no doubt about it. So if you buy in now, don't be surprised if your position goes red. Okay. But yeah, definitely there is a gap also on the daily now too. Snapchat, where am I on the watch list? Snapchat recap real quick. All right. So Snapchat, the thing that caught me with Snapchat is earnings. Okay. So real quick, if you don't know this yet, this is definitely something to keep in mind. Okay. Earnings. When a stock has an earnings that goes bad for them and they sell off like Snapchat did in a really brutal manner, it usually takes about 3 trading days for the stock to bottom out. Now, Snapchat, it looks like it took about 4 trading days before price finally found a hard bottom. Okay. If I flip to PayPal real quick, and I see people are waiting. If I flip to PayPal real quick, we can see PayPal took about 4 days to bottom out. Okay. So when we look at Snapchat, this was something that I had on my mind for actually a couple weeks now, but I was waiting and waiting and waiting for the most opportune time to get a better entry. Okay. That's what I was waiting for. All right. So 4 days, it took Snapchat 4 days to bottom out. Usually it takes about 3, depending on if it's a really, really bloody earnings. So real quick, let's look at Z because I know Zillow had rough earnings as well. So you can see Zillow, they bottomed out on the first day, they bear flagged a little bit, and now they're retesting it again. And it doesn't look like it's a healthy bottom that's forming. I wouldn't be surprised if Zillow makes lower lows here soon, especially if the market turns red. But Snapchat was different. Snapchat held it up pretty well, and it needs to build a base out. Okay. Watch whenever a stock gaps down off of earnings, put it on your watch list, but it shouldn't be on your primary watch list. Put it on your secondary watch list. And by secondary watch list, I mean stocks that you're going to be watching for the month, for the next couple weeks. Okay. Because you know the setup is building, it's forming. You like what you see in the setup, but it's not there just yet. It needs a little bit more time. That's what I did with Snapchat. Okay. You can see how much consolidation Snapchat went through on the daily time frame because it had such a brutal drop. There had to be time for this accumulation phase to take place. Okay, this is actually what it really is. It's just an accumulation phase, but it usually starts after 3 days. So in this case, it's the 4th day, which was October 27th. Now, I trade with moving averages because they help me give their part of my edge as far as how I am as a trader. Okay, something else about earnings. And when we get these big post earnings drops, okay, if you're looking for an easy short opportunity, watch for a company or for a stock to build a base of support out post earnings. Okay, now you're going to get that eventual quick pop to the upside, and that's where buyers are going to start trying to break price back out of this accumulation phase. Watch how price reacts to the 9 EMA. Okay, look at this rejection that Snapchat gave us. This was something that I was waiting and watching for, and I knew, I can't say I knew for certain it was going to happen, but it was a very high probability that this was going to happen. Okay, now we've been in a bull market for quite some time, so I'm not going to enter a short position on a tech name, okay, which Snapchat is, especially with Facebook turning into kind of the leader of Fangman a little bit. Snapchat, these smaller social media names love to follow Facebook's price action, which is basically the king of all social media stocks. And it's starting to take place or starting to turn into that king maker of Fangman names as well. So something else to keep an eye on there. But I wasn't going to short Snapchat, but I knew the short setup was there. So I held off my long entry. Price was rejected at the 9 EMA and price pulled back a little bit. They had to retest the support base that buyers had been building out. They bought the dip above 51.47. That is where a fib level is now sitting because they have updated themselves down to the low of 51.47 up to this high of 83.34. Okay, so I knew this short was probably going to happen. It did happen off the 9 EMA, and then price retraced. Now, here's where it can get a little tricky. You're now pivoting. Price is now setting up to test that 9 EMA again. And look what it did the second time. I did not enter this long trade on the November 11th, which I believe was last Thursday. Price again rejected that 9 EMA. So now I flip it to Friday. I'm watching how price is reacting Friday because again, the 9 EMA, it's getting closer and closer. So at this point, price is essentially at a pinch point. Okay, either buyers are going to break price out to the upside, they're going to turn that 9 EMA into technical support. Through this entire point in time, it was technical resistance. At some point, buyers either need to pop price out of this accumulation phase and turn that resistance into support, or sellers are going to get in control and they are going to break this base of support that buyers have been building, and we would see new lower lows. I watched Friday's candle form. Okay, if you noticed, I waited until about, I think I entered somewhere around power hour or maybe in the 2 o'clock hour, because I was waiting for this daily candle to form and I wanted to give as much time as possible. Look at the daily candle from Friday. It is small. I'm going to zoom in here. It is a small daily candle. It's not as big as what we've seen before, including today's, but it tells me what I needed to be or what I needed to see. There is clear buying pressure shown in Snapchat on Friday. There is a long lower wick present, where you can see at some point sellers were in control. They pushed price down. It looks like to a low roughly of 52.82, and buyers stepped back in to buy the dip and they pushed price up. Notice where this daily candle closed, right below the 9 EMA. So price closed below technical resistance. Volume did not come in though. So this was risky because volume didn't come in. Volume is always the safest piece of conviction that you can look for. Okay. Nothing is ever for certain in the stock market, but if there is one piece of conviction that you want to look for, it is volume. The bullish close that we had on Snapchat into technical resistance with the base being built out and buyers had already tested the 9 EMA out as technical resistance was my conviction to go long. Today was a beautiful opening drive. The futures market did help. We did gap up to start the day. It wasn't led by the tech sector. If it was led by the tech sector, Snapchat could have easily printed $58 roughly today. It actually probably, yeah, easily could have printed $58. But today's rally was led by pretty much Boeing and the Dow Jones. SPY followed a little bit, tech followed a little bit, but tech was not strong enough. Overall, Microsoft really bloody open. Apple had a strong open. Facebook had a really strong open. Think what, an $8, $9, $10 run for Facebook out of market open today. So Snapchat was carried by a few tech names, but it did not get a huge move. It did get a big move, but it did not get a huge move. Huge move would have been up to $58. Still a great move, up 4% on the day as of now. That's my conviction behind going along with Snapchat. Okay. So biggest takeaway that I want you guys to look for, watch for these bases of support to form on names that gap down from earnings, because eventually price is going to pop back to the upside. Snapchat did it today. Well, actually, no, Snapchat did it last week. Snapchat today is finally reversing that trend. PayPal is one to watch. Look where PayPal got rejected today, right under the 9 EMA. It looks like about, where was today's high at? Roughly 214.22. So about $1.50 away from that daily 9 EMA. Okay, watch for PayPal to maybe fall back down to 208, 2010 as the sellers get a little bit more in control. $200 needs to hold for buyers. It's a big psych level. Don't be surprised if PayPal falls a little bit. Watch for this base of support to keep building. PayPal's move, in my opinion, is not here yet because this base of support needs to build out, like I just showed you with Snapchat a little bit, but it is coming. So mark PayPal on your secondary watch list, okay? Keep an eye on it because its move will happen. I just don't think it's ready yet. All right, so I'm actually going to go ahead and draw out my little gap that we have to be filled, or that has to be filled. Now, I think SQ has earnings soon, or not yet. No, post earnings. Okay, so that's good. Post earnings for both names. So if the market, if the market starts to rip to the high heavens, PayPal can definitely beat my estimates for how soon this gap is going to fill. It could fill this week if the market starts ripping to the high heavens. Now, the market's looking a little shaky, so that could be all the sellers need to push price back to the downside as buyers keep building out this accumulation phase and they keep building out this base of support. Speaking of the market, where are we at? Ooh, 467. SPY is trying. Triple Qs are racing a lot of the red. They were down almost $2 at one point today. That's erasing a lot of the red. Microsoft, buyers came in a little bit above the 9 EMA. Apple's such a chump stock to trade. Let's see, Facebook still up $7, so faded half its move. That's okay. Nvidia, just looking at tech giants, Nvidia, beautiful bounce off that 9 EMA. Watch for Nvidia to break out. In all seriousness, watch for Nvidia to break out now. There's a trend line right here, opened at this resistance trend line. That's a tough open. Of course, it sells off. The market flips red, just feeds into the ammunition for sellers to push price down, but it bounced to technical support. Buyers are there at technical support. I have no doubt these earnings are juiced because of, I have no doubt these premiums are juiced because of earnings this week, but keep an eye on it nonetheless. AMD, again, bouncing off that 9 EMA, Stochastic Rsi is dipping down. Maybe we take another trip to all-time highs. And I see there is a question asked. You mentioned stocks will take 3 days to bottom out after a bad earnings. Is this solid for every stock? No, it is not set in stone. It is, in my experience, that is what tends to happen. Let me flip it back. Let me lock this in. Snapchat loves the gap off of earnings. So where's the gap down from Snapchat? Oh, just kidding. All right, so let's see if Zillow's given it yet. I don't remember if Zillow has. So Zillow, no, not really. Zillow hasn't really finished it off yet. PayPal is doing it right now. Today was its first pop out of that accumulation phase. It's probably going to fall back down. I'm trying to think of any recent stock that I know has gapped down. AbbVie. This one did it. Let's see. So AbbVie, not really quite. So buyers pretty much stepped right in for AbbVie. They're really happy to buy this dip, and it's breaking out. But if I unlock this, so you can see that one daily candle, it bottomed on the first day, and then it kind of started popping right back out. But notice the accumulation phase wasn't done yet. It lasted, it looks like, about a full week of pulling back a little bit, and then finally price is breaking out this week. So there's another one to watch. Fubo is one. Fubo, yeah, kind of just bleeding a little bit on earnings, but PLTR might show it as well. PLTR shows it a little bit. So PLTR, 3 days. 3 days ago, it dropped from earnings, or no, was it 4 days ago? I don't know when PLTR reported earnings. I don't know if this is part of it or if this daily candle is, because there is a gap. So I feel like it's this one. Either way, PLTR looks to be about 3 to 4 days. So I said 3, change it to like 3 or 4 days for price to build up that initial base of support. Now, it has to look something like this for buyers to be coming in, okay? This is a reason why I think PLTR's bottom is in control, okay? I made a post about that on Instagram. I think PLTR's bottom is in. Technical and fundamentally, I think PLTR's bottom is in from those 2 point of views. Snapchat, I don't know what their earnings were. I'm talking about pure technical. This is why I thought Snapchat's earnings were in, because it is pretty much 3 days. Okay, so PLTR, it's getting there. Today will be the 4th day. Zillow looks like garbage. Zillow, it would be an exception to this. Zillow looks like it's going to take lower lows. Looks like $55 will print on Zillow. One red day, and the overall market could send Zillow down $5. Or no, just kidding, $8. Thought price was at $60 for a second. So yeah, generally, that's like a general rule of thumb. It's not going to be a rule of thumb every single time. Okay. Let's see. Let's look at Exxon Mobil, because I do want to cover that setup. I'm in position. Am I red? Oh yeah, I'm red. Okay, 64.43. That's why I said this was a starter position. For Exxon Mobil, what's CVX up to? CVX really, really strong. Okay. So Exxon Mobil, I think has faded 20 cents since my entry. That's fine. What's Oxy up to? Oxy looks very strong. Look at that that's a big bounce off the 55 EMA. Really solid there. FANG, this is an oil name. So if you see this ticker FANG, don't get confused with something like Facebook, Amazon, Netflix, Google. Don't get confused. This is an actual stock in the market. FANG Man is what people will call all the tech giants. So FANG is an oil stock. FANG looks really, really good as well, lacking volume though. So yeah, ExxonMobil, I don't care if this is fading at all into close, because look at CVX. Look what CVX is doing. This is not faded one bit. we really got our beautiful entry on this trade. I'm going to get the close that I want on CVX, no doubt, unless, Biden announces that they're opening the petroleum reserves, which would probably hit oil names in a bearish way, but you never know until price reacts. We're going to get this close above this key fib level. So how fib levels are working here for this trade, price closes above one fib level. That means, in theory, we can now anticipate price to go and test the next fib level, which is at 121.39 as our next price target. Okay. That's where I got that 120 strike from. Okay. So I entered 120 strikes. I think they were at the money because how far away they are in time. They're monthlies. They're monthlies for December. So I think 5-6 weeks of time until that option expires. That's why they're currently at the money options. Let us get from, I don't know, let's say 2 weeks away. Those options might be at the money because, CVX is trading at $119 per share, or there might be every dollar on the option chain again, like CVX option chain is for weeklies for the 11/19 expiration. Okay. So how I got that 120 strike was because I'm following fib levels. So if, following fib rules, price is now going to test the next fib level. Well, the next fib level is at 121.39. If that fib level is tested and prints, that means CPX 120 calls are over $1 in the money. And that's going to be a really, really nice swing trade as well. Okay. PLTR, same kind of thinking. I'm playing the bottom of that descending wedge being caught. Let me flip it back to PLTR so you can see it. Buyers held the bottom of this descending wedge. This descending wedge was tested the latest back on October 4th. It's been in the works really since the middle-ish end of August. So yeah, I think it's a really safe place to go long on PLTR. Don't be surprised if it goes under $23 though. Okay. I'll probably cut my monthly position if price goes below $22, maybe 22.50, but I don't really think I'm going to have to worry about cutting this position because of how much time we have, where price caught support, and $25. I picked a $25 strike because that's a psych level for PLTR. $25. Values ending in 0 or 5. Those are psych levels that market makers and traders and investors use. Okay. I mean, SPY hitting 300 for the first time. I remember that. That was huge. That was a huge psych level for SPY to hit. The Dow Jones hitting 35,000 for the first time. The NASDAQ hitting 15,000 for the first time. Triple Q's 400. SPY 400. Those are all huge psych levels. $25 for PLTR. That's a psych level for PLTR to hit. Buyers are going to want to hit that $25 psych level, and then maybe sellers step in and they get in control and they force PLTR back to the downside. But I put so much time on our side for this trade for a reason, because it's going to be a little bit of a bumpy road, but I just want to get in the trade and chill. Also, we have so much time on our side, like 5-6 weeks. I don't need to check on this position every day. Okay, I have alerts set for every fib level leading up to $25 on my phone. That's all I need. So long as my stop loss alert doesn't go off, I don't even have one set right now because I don't think I'm going to need it. I have price target levels set up for alerts, but that's all we need. Just chill in this swing, let it do its own thing. If we have to cut it, so be it. Shit happens. But CVX is another one. I have alerts set. Look at that, CVX. Love this. Love this name. I have alerts set for 120 on CVX, so I know when I'm going in the money. I might add an alert for 118 because that would be basically, every $2. Pretty much I'm looking to have an alert set for. So there's that as well. But CVX, beautiful close. We're going to get on CVX here. Exxon Mobil, I'm probably about to average down or move into a new position while we're on Zoom because CVX is gunning it. Okay, that's a 20-cent jump, I think, since I just looked at CVX a few minutes ago. Oxy's also looking really good off this 55 EMA bounce. Fang's also looking good. Held the 78.6% fib level. Clear buying pressure stepping in. Fang can easily shoot back up here to this high of 117.71. I don't know if this is all-time high or not for Fang. But yeah, if you want to swing Fang calls, I don't blame you at all. But I'm just going to stick with ExxonMobil for all the small account traders out there in the team. Okay. January. Oh yeah, January. If you want to get January PLTR calls, absolutely. That's also a great idea as well. Very, very safe trade. Okay, so why am I choosing Exxon Mobil calls? Okay, and I have not forgotten about the Q&A part. I'm probably going to set that up, or not set it up. I'm probably going to wait until like the last 20 minutes or so to go ahead and answer that. But I do want to get like the live trading portion in as well. Okay, so why did I choose Exxon Mobil calls? Well, let's see. This is treated as a support or a demand zone recently. Okay, let's see where price is bouncing at. Looks like 63.61 is where buyers have been treating price as a demand zone a little bit for since October 25th. Okay, they opened it there on October 25th. They held that zone on October 28th. They held it on November 3rd. They held it on November 12th. Today, it did not hold, but buyers did step back in again today. And you can see right here, they held this at a key fib level. Okay, they bounced price off a key fib level. They're going to probably close it unless there's an absolutely ugly fade for ExxonMobil. They're going to close price above the 21 EMA, which is turning a technical resistance into technical support. The only hurdle now is the 9 EMA, and price could very well close above the 9 EMA still today. Now that price held this fib level, I'm looking for the next fib level to be tested, which is sitting at 66.38. Okay, this is my overall price target, is 66.38. The question is, oil names can be a funky name to trade because you have to worry about two things. They're kind of like Bitcoin miner stocks. You have to worry about the overall stock market. So you have to worry about SPY. Where is SPY's direction going? Blah, blah, blah. ExxonMobil and a lot of these oil stocks that I have listed are weighted names in SPY. So you always have to not worry about it per se. Maybe worry is the wrong word, but you have to keep that in mind for yourself. Okay. You also have to keep in mind, what is the oil market doing? Okay. I hated trading oil over the summer. There was a couple times where we really nailed it, and there was a couple times where we got murdered on oil stocks because of international news. I don't think there's any international news taking place tonight into tomorrow morning. The only thing that I can see that has popped up on my radar in recent memory is Senator Chuck Schumer from New York calling on Joe Biden to release the petroleum reserves that the United States has to lower energy prices or to lower oil prices. Okay. I don't think that's going to happen tonight into tomorrow. So I think these 65 strike calls are safe to go into the money this week. I also chose a risky expiration, okay, because I'm anticipating these to go in the money tomorrow. If these weekly calls go in the money tomorrow, what's going to happen is we're going to capitalize on these weekly options having a really, really high delta and gamma combination, also with a low theta. That is a very deadly combination to have on weekly options on these mid-cap stocks like Snapchat, like ExxonMobil, that can really, really reap a lot of rewards and benefits for traders. Okay. You don't need, to trade Tesla and Amazon every single day to make a killing. If you find a good move, like we did with Snapchat, which is a mid-cap stock, those options can pay huge dividends for you if you're able to capitalize on their moves. Today, we caught a $3 move plus on Snapchat. Okay. For ExxonMobil, if we can catch just a dollar move to the upside, if these 65 straight calls go in the money tomorrow, I have no doubt we can be looking at 30% plus profits. Okay. 90 MA is the only technical resistance right now. The demand zone held right here, as we can see. So that's one big plus that I'm seeing. Okay. As far as conviction goes to go long. Also, look at the Stochastic Rsi. It's in buyer zone. Okay. The Stochastic Rsi is on a scale of 0 to 100. It's currently at 6 right now. It can't really go much lower. So at some point, you have to start wondering, when are buyers going to step in and buy the dip? This is something that I've used time and time and time again that has helped me get in low while everyone else FOMOs in. Okay, think of SOS, think of Tilray as some recent positions where we got in super early and then everyone else FOMOed in a couple weeks after we were already in the trade and we were just chilling in profits. Okay. Question for ExxonMobil. Does the previous daily resistance zone back in June part of how you look at this as well? Back in June. Oh yeah, absolutely. This right here, that's probably when we started getting murdered on energy stocks, and I kind of dropped them off my list. Really up until the last couple weeks. Yeah, absolutely. But as you can see, it's been beaten a little bit already. So it's not so much relevant anymore. I would say, judging by this price action, $65 is the key level to get over. Look at where price was rejected at today, just under $65. A breakout above $65 sends us to 66.38. Hence, I'm trading the anticipated move to the upside that I think price is going to give us, and we're going to see those 65 calls go in the money. It is a risky position because they are weekly options. I love adding time on as a swing trader, but a Monday into a Tuesday, theta isn't going to be the biggest issue that I have to worry about for Exxon Mobil or for these weekly options. Okay. Unless, /CL, bearish news for oil comes out between now and tomorrow morning at open, there's really not a whole lot of momentum that I see Exxon Mobil losing. I also want to show /CL because this was a part of my conviction. And /CL, in case you don't know, this is oil futures. All right, so /CL, this is what caught my eye right here. Was this. Oops, didn't click it yet. This double bottom right here on the 4-hour time frame is what caught my eye to go long on oil stocks. And that's why I entered CVX when I did. And I wish I entered Exxon Mobil when I did, because we would just be chilling in profits right now and there would be nothing to worry about. But, I tried to time the entry a little bit too early. It is what it is. I'm pretty confident it will recover, but if it doesn't, so be it. Okay. When price fell into this demand zone right here, this double bottom, look what the Stochastic Rsi is doing. It's in buyer's territory. Now I'm going to stretch this out and we can see how big of a demand zone this really is for /CL. And I'm actually going to change the colors real quick because I do have that as a thing. This bounced as a demand zone back on November 4th through 5th. And look where it popped back up. It popped up to $85 a barrel. Okay, we caught the dip when we entered CVX in /CL in oil futures. Okay, look at this recent dip. Okay, this has been a demand zone since the middle of October, where price moved up to $83 again. Okay, /CL is hitting my first price target a little bit of $81 a barrel. We can see this was also a support zone. It's now below this $81 barrel mark. So breaking out above this turns that supply zone, really right now it's technically a supply zone, resistance. If it can break out above this $81 supply zone resistance level, whatever you want to call it, we can then move back up to the upside and we can target $83. We caught the bottom when we entered CVX. A little bit of an early entry on Exxon Mobil because I just didn't know, maybe, if oil stocks are going to keep running into close. It is what it is. I don't care if we're a little red on them. Because I'm going to add more into the position. But /CL, this was a bigger piece of why I entered. Okay, Exxon Mobil's TA was solid. It was there. Always, of course, it is a piece of my conviction. But oil futures told me everything I needed to see. Okay, oil futures were actually a little late to the party. Oil stocks were leading the rally before oil futures caught up. And that's why I entered CVX when I did. But I knew once I saw this double bottom in play for oil futures for /CL, I knew once they reversed, energy names were really going to take a leg up. And that's why CVX is trading up at 116, almost to 117. That's why Exxon Mobil was as high as it was. So let's flip it back to Exxon Mobil. Where am I? I'm going to watch this. Got to find it again. 64.48. Okay. All right, so as you can see right here on the 4-hour time frame as well, real quick, it almost looks like price is in a little bit of a descending wedge, whatever you want to call it. It might be there. If you think so or not, look at the 4-hour Stochastic Rsi as well. I showed you the daily. Look at the 4-hour. It's in buyer zone. So the Stochastic Rsi on 2 big key swing time frames is in buyer zone. This is really setting up for a gap up. Now, I might be saying a lot of really bullish things right now, and I'm not trying to hype up this position, but I'm just talking about my analysis or my TA breakdown conviction and all that good stuff. Anything can happen with this trade, especially in the oil market. The oil market is probably the third most volatile market that I have traded in my experience. Bitcoin is probably number two. And then gold and silver are by far the worst. And I don't trade them anymore, but they are definitely the most volatile market that I have traded. Okay. Oil is sitting at number three. There's a lot of risk that comes with trading these energy stocks. So remember, nothing is for certain in the market. Remember that this position, it can go red, it can go green, anything can happen. Okay, but the TA is lining up for ExxonMobil to have a really nice week in oil stocks in general. Okay, and also one more thing to keep in mind: we might get, not for certain, we might get a bullish EMA cross on the 4 hour for ExxonMobil, and that will come when the 9 EMA crosses back above the 21 EMA. That is a bullish EMA cross, and that would mean that it is technically a buy signal. There, I trade with EMAs, but I don't use it. I don't use them that way. But there are traders out there who trade with EMAs that once they get a cross, that's their conviction to go long or to go short. Okay, we haven't gotten it yet, but price, if price gaps up tomorrow, we can easily get a bullish EMA cross as well. Okay. Let me see. Will you be addressing lotto calls? Oh, yeah. Thank you for reminding me. Conviction behind that. It is TA based a little bit. Okay. They have an extra week of time. They're not the weekly 65 calls. The volume on that option is absolutely insane. 15. Let's actually see what it is now. Because let's see. I have a feeling it's a lot more than that. Okay, I'm down 13.5% on ExxonMobil. That doesn't bother me at all. Also, on the 5 minute for ExxonMobil, I just so happened to pull this up. A massive, massive volume bar just came in for ExxonMobil on the last 5 minute candle. How many volume was 515,000? That's massive, and it's a fairly bullish 5 minute candle. It's a green candle, so that's why I'm saying fairly bullish. Maybe a big buy order just came in, literally, for ExxonMobil. So that'll be interesting to see how ExxonMobil guns it in the close. Oops, sorry about that. I just had an alarm go off, and Jeremy is joining us. Very good. So that's really interesting, actually, for ExxonMobil. But why I entered that lotto trade? Getting back on track. Yeah. So volume has increased by 2,000 now. Out of the money options are not traded very often by retail. Okay, 90% of retail fails in the stock market. It fails at trading. Okay, I've been stressing that to my mentorship group a lot. 10% of retail succeed. Okay, retail traders trade at the money options 98 out of 100 times. They will swing them. They will swing weekly options from a Thursday night into a Friday night. 90% of retail traders, if you ever want to get an insight as to why 90% of retail traders fail, pull up StockTwits, pull up Twitter, and then go to the cash tags of AMC, GME, and any meme stock. That's going to be a snapshot of why 90% of retail traders fail. Okay. Retail traders trade at the money options. Smart money, like market makers and institutions, will trade out of the money options because they want to catch as big of a move as possible so they can sell their juiced option premium back to us retail, because retail will be chasing. Okay, retail likes to FOMO in after a stock is made 8% of a move, after a 10% of the move. Okay, if you ever see something trending on StockTwits, you might just happen to see people asking, is it still good to buy? And of course, people will hype them up. Okay, institutions were already in before retail. 9 times out of 10, you will not beat an institution or smart money or a market maker of some kind into a trade before they are in. You can do it sometimes, but it's very rare just because they are market makers. Okay. Why I entered ExxonMobil? Because you can see when market makers are really trying to show their hand a little bit. Okay. They can reveal their hand to you in some ways. And one of those ways is to track the volume on an option. Okay. Remember what I said about retail? They trade at the money options. Market makers trade, and smart money in particular, trade out of the money option premium. Okay. Those 67 strike calls that I'm treating as a lotto have 17,000 volume on them right now. When I entered that trade, they had 15,000 volume on them. I've been looking at them since earlier today, when they had over 12,000 volume on them. Okay, so from when I started looking at them to now, and in the middle of that was our entry. When we entered, it was 15,000 volume. The volume is now up to 17,000. There is a market maker big. There's a very big market maker on this option. Now, nothing is for certain, and that's a very big move for ExxonMobil to make. Remember, my target for ExxonMobil is $66.38. This option doesn't go in the money if that price target is met. Okay. The immense amount of volume on this option is my conviction behind it, because there is TA behind it. Okay. I showed you my TA for the 65 strike calls for ExxonMobil. Okay. $67 is a little bit out of the money. You can see where that's been a really big resistance level for ExxonMobil going back into June, as a member mentioned as well. Yes, I did discuss Snap in the beginning. This was recorded, so if you missed Snap, that's fine. I will post the recording in the server, and you can go back and rewatch it. Okay, but this is a ton of volume for ExxonMobil, and it's out of the money. They're cheap options. Okay, this is what market makers do. They get in on these cheap options while they're very cheap. They're so far out of the money. Retail isn't trading them because retail trades at the money, usually only. This way, when this option goes in the money or it's turning into at the money, guess what? This market maker is selling them all back to retail who are buying them, and he's up, I don't know, 200, 500% sometimes on them. So it's really just the immense amount of volume on this option. That's why I'm in. But of course, there is the TA involved as well in ExxonMobil. All right, so now I want to see, we have 15 minutes until market close. How is SPY looking? Oops. Is SPY going to give us a bullish close? 19, we faded a little bit. You know, triple Qs were very close. I think they were 8 cents in the red. They're now 53 cents. All right. That's interesting. Look at what triple Qs are doing. Let's see. Aha. We can draw some channel lines now for triple Qs. Very interesting. So here's what triple Qs are going to do. Price is either going to break this support level or this support channel trend line, whatever you want to call it, right here, and we're going to revisit 387.55. That's what's going to happen if sellers get in control, or buyers are going to get in control, and we are going to break out of this resistance trend line right here, and we're going to revisit all-time highs. Very interesting dynamic taking place for triple Qs right now. Very, very interesting. Yeah, I'm not touching it. I'm not swinging any tech stock overnight for this reason. It's going to be interesting to see. You know, this is a pretty bullish 4-hour candle, second half of the day. But when I started this Zoom meeting, triple Qs were like 8 cents in the red. They're now up to 60 cents. So sellers are there, very present. And the Dow Jones has gone red on the day as well. So that says a lot too. SPY. Let's see what SPY wants to do. SPY fell back into this resistance trend line. That really sucks for SPY. Because, you know, they had the gap up above it and they were actually holding it a little bit throughout the trading day, but it sucks falling back into this channel. And again, we can draw a support trend line as well for SPY right there. Very similar story to triple Qs. Funny how they basically trade the same now, which kind of sucks, but it is what it is. You know, actually, that trend line is really ugly. I'm not going to draw that one. But either way, similar story as I just said with triple Qs. If sellers get in control, we will revisit 462. Watch for this support trend line to break. Also, you know, if buyers get in control, watch for this resistance trend line to break, okay? If buyers get in control and we rip out of this, we're going to revisit all-time highs. Very interesting dynamic right now. And ExxonMobil, 64.39. Gross. You can start to see that weakness in the markets is starting to leak over into other names, but Ford/CL oil futures had a very bullish close. So I'm not really too phased about that yet. I'm debating on a new entry for ExxonMobil. I'm trying to think of what I would want, because this new entry is going to be with more time. All right, let's see. All right, I think I'm going to take my average down in Exxon Mobil. Entered my starter position with the thought in my head already I was going to average down, just because of where price was at on the chart. I kind of knew it would be risky, but just in case price kept going into close, I wanted to get in at that point in time. So let's see. All right, we're gonna do, or not we. You don't have to follow me, but I'm going to enter next week, buying more time. Next week, 65 strike calls for a fill of 79 cents per contract. All right, so that is my new position I just added. It is a bit of an average down, I mean, I'm red by 14.5%, which isn't a lot on my first position I entered earlier. And so now I'm entering, next week 65 calls. So I'm adding more time on, which is fine. Okay. It just sucks because it looks like the market's getting a little weak heading into close, which could be an indication that maybe the market gaps down tomorrow. But oil futures were very bullish. So again, very similar to Bitcoin names. There's two markets pulling at these oil stocks. It's SPY and then the oil market itself. Oil market looked pretty bullish. SPY, on the other hand, it's looking a little weak. So I'm in light, just trade cautious. Um, if you want to hedge with SPY puts or ExxonMobil puts to the downside, you can do that as well. Um, but yeah, I'm chilling with these swings. I'm gonna watch how the market closes here. We're slowly eking a little bit lower and lower, which is fine. Apple probably the biggest disappointment of the day, but is what it is. All right, so we got 10 minutes left. Finally, I want to jump into this Q&A, trading psychology, risk management. I asked all of you to come prepared with one question, or not one question, just to come prepared with questions. So any questions that you guys have about trading psychology, risk management, go ahead and type them in the chat box down below, and I will be more than happy to answer them or give my feedback on it or anything of that kind of manner. Okay. Is there any questions for me about psychology? Oh, there we go. I was gonna say. All right, let's see. When entering swings, do you set stop losses on price targets or percentages? It really does differ for me. I have three kind of stop losses I use, and each one is different based, it literally changes trade by trade by trade. Sometimes it will be percent stop loss, 25, 30, 35%. I usually don't go past 35% stop loss. Okay. Other times it will be a price level. Okay. If price breaks, you know, support X, then I cut. Okay, because that means sellers are going to get in control and they're going to take a price, or they're going to take price back down to the downside. Okay. Other stop losses might be if price breaks a certain fib level. Okay, fib levels can be used as support because buyers are going to use them as places, or not buyers, but traders will use them as places to buy and sell stocks. So it might be a fib level at a certain point in time, or it might be a moving average as well, in EMA. Okay, if price breaks below, the 55 EMA, that's breaking technical support. I'm done. I'm out, because that's sellers pushing price below a very, very key technical support level. They can really push price back down to the downside. Okay, so it does vary trade by trade by trade. Usually, though, when I give out a trade and trade alerts, I try and tell, or I try to remember to put my stop loss down, so you guys know ahead of time. But it really does vary trade by trade by trade for me. I know you're not big on letting green trades turn red, but how do you exit a position with confidence you are not leaving too much money on the table? Fib levels. That is what I can tell you. Fib levels. Fib levels give me price targets. Let's revisit Snap. That was the wrong ticket. We're going to look at Snapchat on the 4-hour time frame because this Snapchat will answer that question. Oh, okay, I'm locked in. I hope it didn't change. No, fib levels have not changed yet for Snapchat. Perfect. Okay, I'm gonna really zoom these in here. Give me just a second. Bear with me. All right, so fib levels, I use them as my price targets 9 times out of 10 when I enter a trade. Only other time I don't use them as price targets is if I am using a psych level, like $70, like $50 per share, something like that. Okay. Fib levels are what I use as price targets. For instance, Snapchat today pretty much opened at my first price target, which was $54.24. That puts my 54 calls in the money. Okay, at that point in time, I think they were already up like 25% roughly when they were at 54.24. I can't ask for anything more than that. Okay, the market provided my first price target was met. Half of my position is already in the money because remember, I went with 54 strike calls and 55 strike calls. Okay, half my position is already in the money. I'm good to exit now. I can't ask for anything more. Okay, now we flip it to my next price target. Okay, of course, you leave runners. Okay, my 55 strike calls, they have yet to go in the money. 54.84 is my second price target. Okay. At this point in time, I had exited all my 54 strike calls because I was 84 cents in the money. I was perfectly fine with this exit. And this was off the initial morning pump. Okay. I'm watching this on the 5-minute time frame. I'm like, holy shit. Okay. I have these levels written down next to me. So I don't have to watch Snapchat on the 4-hour time frame to see if my levels are hit. So I have them written down next to me. I know what they are. Okay. At this point in time, I exit all 54 straight calls. I'm good. Next up, it's 55 straight calls. Now, Snapchat, $55. That's a psych level, which I went over earlier in this Zoom meeting. Okay. That's a big level. At that point in time, I take off once the 55 straight calls go in the money, I'm taking off 2/3 of that position. So I'm rocking with 1/6 of my original position, basically. I'm out of 54 straight calls altogether, and I'm letting runners run on the 55 straight calls. At this point, I did not expect this move to hit. $55 hit this morning. I was like, holy smokes, that is crazy. I was not expecting that kind of open for Snapchat. Okay. Especially, right away after market open, futures start showing weakness, literally right away. Facebook was the saving grace for Snapchat. Facebook gunning it this morning, carried every social media name with it. Okay. Futures, staying green helped, but Facebook really helped carry Snapchat over the finish line. Once this price target is met of 54.84, I was not going to let this trade turn green. And I was just so happy with profits after this. Okay. I exited full position once 55.61 was met. So to answer your question, I'm not leaving too much money on the table. I know as a trader, I'm following my price targets. If my price target is met for me to exit for profit, and now keep in mind, look, when I exit here, the 55 straight calls are at 55.61. I'm 61 cents in the money on my runners. I'm perfectly fine with leaving profit on the table because every price target was met. It's up to me to decide whether or not I let more runners run, position sizing to begin with. If I went bigger over the weekend with a larger position, yeah, I could have left more contracts keep running. But it's honestly just like, take satisfaction and take pride in the fact that you exited at your price targets. Okay. Because I put a message out there this morning, I think at 55.61, that, hey, this is a 4-hour fib level. Price could retrace off of this level. And price rejected at first off of this fib level. Obviously, it did not stay moving. Or obviously it did not stay as resistance, but it did treat it as resistance for a minute. Okay. And then price, was able to bust right through that. Okay. Take pride in the fact that you exit at your price targets because you never know what's going to happen. Now you can leave runners with trailing stops. That will obviously help as well. But honestly, it's just like a psych thing a little bit. Okay. Just take pride in exiting at price targets. Okay. The market provided and you executed on the opportunity. That's something to be very, very proud of, because there's a lot of people out there in the community or in the trading world that can't execute on what opportunity the market gave them because they're afraid to enter to begin with, or something else is going on inside their mind that's holding them back. Okay, so just take pride in it, be happy. Okay, and then move on to the next trade. Don't get caught up looking at it. Okay, I think I stopped looking at Snapchat once it broke through 55.61. I was like, damn, I'm done. Okay, now I think I went back like a little while later and I saw like, holy smokes, $3 move and stuff like that. Okay, but other than that, I mean, I don't care what happens. I really don't. The 55 straight calls are still hella in the money right now. And in all honesty, Snapchat might gap up tomorrow off of continuation. I don't know. But either way, high probability setup, execute it, take pride in the fact that you exited at profit taking points. Okay. And then move on to the next trade. That is the biggest thing I can stress to you. Once you exit completely, move on to the next trade. Don't get caught up in what could be or might not be. And I got to text somebody back real quick. So give me 1 second and then I'll get to the next question. All right, let's see. Moving on to Alan's. Alan's question: how do you determine whether to hold through an entire market pullback when shit hits your stops? Last week, that massive sell-off day because of inflation concerns, busted a lot of setups. Yep. It sucks. That's human trading. Okay. Remember, I think it was Monday of last week or Friday of the week before. Somewhere around that time, I said algos are off, human trading is back on. Human trading sucks to trade in. Volatility comes back. That is not my forte in the market. Some people thrive off of it. Other people, it's not their edge. My edge is when there's no human trading. Okay. I'm fine with these red days. I can find the short setups, but it's when volatility comes into play that a lot of TA gets busted. Okay. So that really comes down to knowing your edge, knowing what defines you as a trader a little bit. Okay. Or not defines you as a trader, but like, what are your strengths? Okay. What market do you trade the strongest in? Okay. If you trade strong in a low volume melt up and you're constantly buying calls, you can catch these big swing moves. Okay. Trade to your strengths. When the market isn't giving you that opportunity right now, sit on your hands, wait for your opportunity to come. Okay. That kind of falls into the thing of you don't have to take a trade every single day, right? You don't need to trade every day. Focus on those high probability setups. Let the market come to you. If the market busts all of your setups, take a day off. Let the market give you time to give you more setups for you to find and trade off of. It sucks from a mental standpoint because it feels like you're hitting a concrete wall. At least for me personally, I feel like I'm hitting a concrete wall when stuff like that happens. But take a mental break as well. Don't trade for the day. If it's happening on a Thursday, take Thursday and Friday off. Fridays tend to be shitty days to begin with. So just take the day off. Have a long weekend. Come back that Monday, do your due diligence Sunday evening, Sunday night, get everything out of the way. Monday morning comes around for the new week. You are refreshed. You have a mental reset, clear mind. You didn't hold any positions over the weekend. You're ready to rock and roll again. Let me make sure I answered everything. Yeah, and then the part where you say that went right back into it the next day, that's the really shitty part about human trading. So at that point, they say they went right back into those initial setups. Watch for continuation patterns to form. Okay. Or maybe was it a trap forming? In hindsight, maybe clearly it wasn't a trap forming, but you don't know that at that point in time when it's actually happening. So it sucks, but like it's a part of trading. So then I would say know when your strengths are to trade and know where your weaknesses are, and sit on your hands if it's not your best. Sit on all cash, sit on your hands when it's not your best market conditions right now. Okay. Oh, he's no longer with us, but yeah, no problem. How many contracts do you typically buy? Absolutely, absolutely. How many contracts do I typically buy if multiple contracts? When do you sell? I try to stick by rules of three. I don't post my position sizing a lot. I don't post profits um, because I put a lot of focus on helping flip small accounts, finding small account trades. Exxon Mobil, Snapchat, Fubo from a few weeks ago ripped to the high heavens like a $3 move, whatnot. PLTR, this again as another small account trade because just because they're small account trades, I can load the boat on them. Okay. I'm trying to focus on people who have a smaller account, a few hundred, up to a few $1,000s, where they're trading these small to mid cap names. They can't really afford a lot of contracts. Okay. If I'm able to show you that I can load the boat, um, it might think that, you might start to think, oh, well, he's really confident in it. I'm going to be really confident in it too. And I'm going to load the boat. And you might put your full account into that trade. That's not something I want to do because that's a huge risk management rule to break. Don't ever put your whole account into one trade. But I follow the rules of threes. I'm adding at least three contracts. So to give you an idea of how I position, if I say I am in a trade very lightly, which I do say from time to time, depending on the setup. If I say I'm in a trade very lightly, it means I'm in three contracts. So remember that from here on out. If I say I'm in a trade very lightly, I'm in three contracts. Okay. My normal position sizing might be anywhere from 6, 9, 12, up to 18 contracts at a point in time, depending on if it's a small cap name. And if I'm in 18 contracts, it's going to be something like BLTR, American Airlines, Fubo, where it's going to be a mid cap name with really nice, cheaper premium, or it's going to be a smaller cap name where I can load the boat and it's not going to cost me a lot of buying power, so the risk is lowered. Okay. But if from here on out, if I ever say I'm in a trade very, very lightly, I'm in three contracts at a minimum. Okay. I'm assuming it depends on the price of the contract. Yeah, to a degree, it does. So if I'm trading something like Microsoft or Apple, yeah, I'm not going to be trading 18, 21 contracts following the rules of threes. I'm going to keep it around 6 to 9 contracts. Okay. Is there any more questions for me? Great, great, great meeting. Great questions also. Are there any types of trades that yeah, lottos. And I don't take a lot of trades that are lottos. I think the last time, and I might be wrong here because I'm just going off of my memory. The last time I signaled a lotto trade was this, like, I'm not trying to be funny, but like, it was CVS, like 85 strike calls or something from back in August. I remember that because I posted on StockTwits and I gave it to the free members chat as well. So I think that was the last time I gave a lotto trade. But yeah, like complete loss for me is a lotto. Don't care about it. But I don't give lotto trades a lot for a reason because I don't really care for it. They're more like earnings to me. But ExxonMobil, this was a big exception because of the volume on the option chain. All right. Is there any more questions for me? Absolutely. Absolutely. Thank you. Thank you very much. Thank you very much. And real quick, I didn't say anything because I was talking and answering questions, but I was watching this close. This is why the close is so weird sometimes. We got a bullish close on SPY. This was pushing like 70 cents in the red while I was talking. SPY closed green on the day by 13 cents. That's a bullish close. Dow Jones finished flat again. Triple Qs, they were pushing like what, 80 cents red at one point. They closed down on the day red by 7 cents. We got a bullish close out of the market. Let's see where Exxon Mobil closed. 64.38 didn't affect it. CVX, very bullish close, I believe. So Exxon Mobil, yeah, very bullish close. Exxon Mobil, don't be surprised if this thing gaps up in the money tomorrow. It's lagging. It's lagging behind CVX. CVX is kind of like the sector leader of the oil names a little bit. Maybe FANG is now. I don't know. Post earnings, don't really trade or pay attention to FANG. CVX is kind of like the sector leader from my eyes and my understanding. Watch ExxonMobil to play catch up tomorrow. Absolutely. Absolutely. All right. If there is no more questions for me, I'm going to go ahead and wrap up this meeting. This was recorded in case you came in halfway through. You might have missed the beginning. I did go over some good stuff. And if you ever want to revert back to this as well, this recording will be posted in the channel where it says Father Time's Library. Okay. That is where this recording will be posted. I'm going to try and get that uploaded tonight. If YouTube wants to cooperate with me tonight, that would be a blessing. All right. But with that being said, I hope all of you had a great day in the markets today. I hope all of you have a great rest of your Monday. Stay safe. I look forward to seeing everybody in the server tomorrow morning, and hopefully oil markets give us a pleasant surprise for market open tomorrow. All right. Take care, everybody.